Hey everyone, welcome back to the channel. Today, we're diving deep into one of the most talked about topics in the crypto world right now. Why Bitcoin might be on the verge of its next big rally. Whether you're a seasoned investor looking to stay ahead of the curve or just starting to explore the world of cryptocurrencies, this video will give you a comprehensive look at the key factors that could drive Bitcoin's price higher in the near future. We'll be exploring Bitcoin's unique supply dynamics, the surge in institutional adoption, macroeconomic forces shaping the market, the latest technological upgrades to the Bitcoin network, and the historical price cycles that often precede major moves. By the end of this video, you'll have a much clearer understanding of why so many experts believe Bitcoin might be gearing up for another explosive growth phase. So, stick around, because there's a lot to unpack. And if you find this video valuable, don't forget to hit that like button and subscribe to the channel. It really helps support our work and keeps you up to date with the latest insights in the crypto world. Let's get started. Let's kick things off by talking about one of the most fundamental aspects of Bitcoin, its supply dynamics. Unlike fiat currencies, which can be printed in unlimited quantities, Bitcoin has a fixed maximum supply of 21 million coins. This hard cap was coded into Bitcoin's protocol by its mysterious creator, Satoshi Nakamoto. And it's one of the reasons Bitcoin is often called digital gold. But it gets even more interesting. Every 4 years or so, there's a process called the halving, where the reward that miners receive for adding new blocks to the Bitcoin blockchain is cut in half. The most recent halving occurred in April 2024, reducing the block reward from 6.25 to 3.125 BTC. Historically, each halving has preceded massive bull runs. Think back to 2017 and 2021, when Bitcoin's price skyrocketed to new all-time highs within 12 to 18 months after the halving event. This is all about supply and demand. With fewer new coins being mined, scarcity increases, and if demand stays the same or grows, prices tend to rise. Consider this. Miners used to bring 1,800 new BTC to the market every day, but now it's down to just 900 BTC. With major exchanges and institutions scooping up coins for their customers or their balance sheets, there's simply less supply hitting the market. That's why some analysts argue that Bitcoin's built-in monetary policy could create a powerful upward force on the price, especially when combined with the other factors we'll discuss in this video. Next, let's dive into a trend that's been reshaping the crypto landscape: institutional adoption. Just a few years ago, Bitcoin was viewed as a speculative asset, something for tech enthusiasts and risk-tolerant traders. But that's changing fast. Today, we're seeing some of the world's largest financial players, think BlackRock, Fidelity, Vanguard, and even banks like JP Morgan, starting to embrace Bitcoin as a legitimate investment. One of the biggest game changers this year was the approval of several spot Bitcoin ETFs by the SEC in early 2025. Unlike futures-based ETFs, which can be complex and detached from the actual price of Bitcoin, these spot ETFs directly buy and hold Bitcoin on behalf of investors. This means that pension funds, insurance companies, endowments, and even conservative wealth managers can now gain exposure to Bitcoin in a regulated, easy-to-access vehicle, without worrying about private keys or cold storage. And let's not forget that Bitcoin is now being discussed in the same breath as gold, stocks, and bonds in diversified investment portfolios. When you have multi-trillion-dollar asset managers even allocating a tiny percentage of their portfolios to Bitcoin, the potential inflow of capital is staggering. Some estimates suggest that if institutional investors allocate just 1% of their portfolios to Bitcoin, we could see hundreds of billions, even trillions, of dollars flowing into the market over the next few years. That kind of demand can't be ignored. Now let's zoom out and look at the big picture. The macroeconomic landscape that's shaping investment decisions worldwide. We're living in a time of unprecedented monetary policy experimentation. Central banks across the globe, from the US Federal Reserve to the European Central Bank, have spent the past decade printing money and keeping interest rates near zero to stimulate their economies. But as inflation started to surge in recent years, these same central banks have been forced to hike rates aggressively. This has created an environment of uncertainty and volatility. Investors are asking, where can I put my money to protect its value? Traditionally, assets like gold have been considered a hedge against inflation. But Bitcoin is increasingly being seen as a digital alternative, a decentralized, scarce asset that governments can't inflate at will. Unlike fiat currencies, Bitcoin's supply is transparent and predictable. That's a powerful narrative in a world where trust in central banks and fiat money is being questioned. Consider the recent banking crises and debt concerns in several developed economies. When people worry about the health of the financial system, they often look for alternatives. Bitcoin's decentralized nature, no central authority can control it, makes it especially attractive during times of macroeconomic stress. So if inflation keeps running hot or if financial markets face new shocks, Bitcoin could benefit as investors seek out safe havens. Bitcoin isn't just about price charts and speculation. It's also about technology and innovation. Over the past few years, Bitcoin's ecosystem has undergone significant development, making it more robust, user-friendly, and versatile. One of the most important advancements is the Lightning Network, a second-layer protocol that allows for instant, low-cost Bitcoin transactions. Instead of waiting minutes or paying high fees on the main Bitcoin blockchain, Lightning enables microtransactions and could unlock Bitcoin's potential as a medium of exchange, not just a store of value. Beyond Lightning, we're seeing an entire wave of innovation around Layer 2 solutions and integrations with decentralized finance DeFi. Developers are exploring ways to build smart contracts, lending platforms, and decentralized exchanges on top of Bitcoin's security and decentralization. While Ethereum and other blockchains have dominated DeFi so far, Bitcoin's massive network effect and its reputation as the most secure blockchain give it a strong foundation to expand its use cases. These technological improvements could drive new adoption among both retail users and businesses. Imagine being able to pay for a coffee instantly with Bitcoin, or settle international remittances for a fraction of the cost charged by traditional banks. As more developers and companies build on Bitcoin's infrastructure, its utility and relevance grow, reinforcing the case for long-term price appreciation. Finally, let's talk about market sentiment and Bitcoin's historical price cycles. Anyone who's been in the crypto space for a while knows that Bitcoin tends to move in predictable 4-year cycles, driven in large part by the halving events we discussed earlier. Typically, these cycles include a bull run, where prices soar, followed by a bear market where prices correct, and then a period of accumulation where smart investors quietly build their positions before the next surge. Right now, according to many analysts, we're in that accumulation phase. Prices might seem relatively stable or even boring compared to the wild swings of previous years, but behind the scenes, long-term holders, including big funds and experienced investors, are accumulating coins in anticipation of the next big move. On-chain metrics like the hodler wave, exchange reserves, and miner outflows all suggest that supply is tightening and strong hands are holding. Moreover, public sentiment tends to lag behind price. By the time mainstream media starts hyping up Bitcoin again, the price has usually already moved significantly. That's why understanding these cycles can be so powerful. While no one can predict the exact timing, history suggests that the post-halving period, the 12 to 18 months after the event, often brings substantial price growth. If this cycle repeats, we could see Bitcoin breaking its previous all-time highs and heading into uncharted territory. So, to sum it all up, between Bitcoin's fixed supply and halving cycles, the wave of institutional adoption, global economic uncertainties, ongoing technological innovation, and historical market cycles, there are plenty of reasons to believe that Bitcoin could be gearing up for its next big rally. Of course, crypto markets are volatile and nothing is guaranteed. Always do your own research and never invest more than you can afford to lose. But if you're a long-term believer in Bitcoin, this might just be the perfect time to pay attention. If you enjoyed this deep dive, please smash that like button, subscribe to the channel, and hit the bell icon so you don't miss future updates. I'd love to hear from you in the comments. Do you think Bitcoin is headed for another big bull run? Or are you cautious about the future? Let's talk about it below. Thanks for watching, and I'll see you in the next one.